Welcome back to IOS YouTube channel. Today we'll be looking at manufacturing accounts. That is why you can see me with calculator, because manufacturing account is one of the comprehensive accounts that disturb most students. So this manufacturing account, it's have some process or involve some process which make it to be a comprehensive part of accounting. So now, if we are talking about manufacturing, we know manufacturing involves the transformation of raw materials into finished goods, which will be readily available for the customers or for the final consumers. So that means the process I'm talking about is that when you see RM, which is the first stage, which is where they convert raw materials. So which this RM means raw materials, because raw materials, which we have another stage which we call WIP, which is known as work in progress. WIP means work in progress, where you will see something like finished goods, which this finished goods means the final stage of production, which we know as finished goods. Finished goods. Now, this makes manufacturing account to be one of the most complex or comprehensive accounting to prepare. So in this sense now, this beyond, we are talking about trading or profit and loss account. You know, trading or profit and loss account, it shows that you are just an intermediary person preparing the accounts, that you purchase goods, which is finished goods, from the producer. The producer in this sense now what we mean by manufacturer, which we are preparing the accounts for as manufacturer, and make it available for what? The final consumer or customers. But now in this sense now, we want to be calculating the cost, which is known as the direct cost, the cost of raw materials, to the processing function of what? Work in progress, then to the final stage of the finished goods. Now in this stage now, we now have a top processing party. This is the trader. For us, a stage whereby we'll be preparing trading profit and loss accounts. And this is the producer, which is the manufacturer. This is a stage where raw materials are being converted to what? Finished goods, where we now have a trader to prepare an account to determine the profit and loss of the account. So now you can see that is a comprehensive account. So by giving you this, I will be using this abbreviation when we are solving a question, and that same questions will serve as our format for this class. So then all the necessary concepts I will be explaining to you. So let's move on to an example that we can use to simplify this particular account for ourselves, which we know as manufacturing account. So let's prepare manufacturing trading profit and loss account. So let's call this one the debit side. This is the credit side. Then you have your complete T format. Then we now have Mr. Ojo, manufacturing trading profits and loss accounts at year ended. So this is like we are preparing the account for the manufacturer, for Mr. Ojo, which is now, you can see the process now, manufacturing. Then we move to trading accounts, then move to profit and loss accounts at year ended, whatever year that is given to you. So the question that we'll be looking at, that will also serve as our format today, is here. You can see, this is the question. You can see, don't worry, I will drop the question for you in the comment section so that you can have the picture of the questions where this class is going on, then you can be following the format. So the first thing you need to do, since that we are dealing with manufacturing accounts, we know manufacturing accounts involve raw materials, the transformation of raw materials into intermediate goods, then into finished goods. So the intermediate goods is the one we refer to as work in progress. So what you have to do is that you start with opening stock on RM. When you see RM, you know that we mean raw materials. So let's see what's the value. Let me look at the value of opening stocks on raw materials here, which is 25,000. 25,000. Then we look at what do we mean by opening stock or raw material. Opening stocks or raw material means this is the raw material that is available as of last year. So which is they brought this forward to this year. So assuming the account that we are preparing now is 2025 account, that means the raw material that is left last year, which is unused, that is the 25,000 as cost, which we brought forward to 2025, the current year that we are preparing the account for. So now we now look at it. Then the next thing, we know that this 25 cost of raw materials cannot satisfy our production this year, because this one is the leftover for the last year. Then we need to go to market and purchase more raw materials, and that's where we do what? We add purchases on RM. So let's see the value of the purchases of raw materials here. The value of purchase of raw material here is 250,000. 250,000. So the value of raw material is 250,000. Then another important thing is check, do you have carriage inward or RM in your question? Either it is an exam question or a test question, check, do you have carriage inward on raw materials? Then if you have, you do what? You add carriage inward too. Add carriage on RM. So add carriage on RM means carriage inward on raw material. That is the cost of transportation of the raw material to the factory or to the productions. That is what we mean by carriage on. Let me look at the value. That is 5,000 naira. So the value for carriage inward on RM is 5,000 naira. So let's sum this together. So by summing this together, this plus we have 30,000. 30, that means we have 280,000. Now, this 280,000 here means cost of raw materials available. So this will now be cost of raw materials available. Cost of raw materials. So this. So after this, you now less your closing stock. So less closing stock on RM. So you less the value of your closing stock on raw material. So let's see what's the value of closing stock giving us here. 22,500. So the value of closing stock here is 22,500. So we need to subtract that. So 280,000 minus 22,500. Let's see what we have. So we have 257,500. So this value or this cost that we have here, we known as costs of raw materials consumed. This is cost of RM. This is cost of raw materials consumed. So I hope you are following it step by step. So this is cost of raw materials consumed. Now, another important concept that we are going to arrive at. So after we getting our cost of raw materials consumed, we need to get what we call prime costs. Prime costs. Prime costs are direct costs that associate with particular unit of output. Please note this. Prime costs are direct costs that associate with particular unit of output. That is, these are costs that we can directly trace to production process or to the production of raw materials. It can be directly traced. For example, manufacturing wages. That is direct labor. The wages that we are paying to the operators, people that are operating the machines in that factory, those are direct costs. They are part of prime costs. So we have direct expenses, direct wages, direct materials. All those things are under what we call prime costs. So now we want to get our prime costs now. So let's see, what do we have here that's part of the questions of prime costs? One, when you see royalties, royalties is part of what you can use under direct expenses. So when you see royalties is part of what we can use to get our prime cost. Let me look at the value of royalties. So the value of royalty here, I'm trying to trace it, is 1,500. Royalties, 1,500. Then we have, we have direct wages or manufacturing wages. They mean the same thing. So, but the one we have here is manufacturing wages. Manufacturing wages. So let's see what's the value of manufacturing wages here. The value of manufacturing wages here is 75,000. That is the wages given to the operators or people that are directly working in the production process. Those are what we call manufacturing wages. So now with this, we need to add these two. I think those are the two things that we need to add to our cost of raw materials consumed so that we can get our what we call prime cost. So let me do that. 75,000 plus 1,500, then plus 257,500. Let's see what we have. We have 334,000. So this 334,000 here is now refers to our what? Our prime costs. This refers to our prime costs. Now, after getting our prime costs, these are the costs that we know as, these are the costs that we know as direct expenses that we can easily trace to the production process. But we still have another cost that cannot be directly traced to the production process, such as depreciation of plant and machineries, factory fuel and plants. All these things are known as factory overhead. So what you do now, after getting your prime cost, you go to get your what we call factory overhead or overhead costs. I do underline like this. So factory overhead or overhead cost. So let's look at, so what's the important idea in factory overhead is that you look at your question, any place you are seeing factory rent, factory insurance, fuel and whatever, or when you see lubricants is part of it. Depreciation of plant and machineries is part of it. So let me see what we have here. Now, fuel and power is here. I can see fuel and power. So what is the value of fuel and power here is 850. 850. I can see factory, no, I can see lubricants. Let me start one by one. I can see lubricants here in my questions. I'll drop this question for you in the comment section. I will send the picture. I'll add the picture to the comment section so that you guys will be following. So 3,000. Then we still have another one here. Factory insurance. We have what we call factory insurance. Factory insurance. Factory insurance is 1,050 naira. 1,050 naira. That's factory insurance. So we still have factory rates. Factory rates. So the factory rate we have here is 200. We have factory rates. We still have, let's see another thing that we have here. We have depreciation on plant and machineries. Depreciation on, it will come here, plants and machine. Depreciation of plants and machineries is 8,750. 8,750. So let me look at the question very well. You can see here is the question. So let me look at the question very well. If I can find any other important information under factory overhead, which is known as indirect cost in manufacturing account. So I think that's all. That's all we have in this question. So what we now do is that we need to add all these factory overhead together. Let us add all the factory overheads together. So in that process, we have 850. Please be doing this, be adding it together at your own end too. 850 to 850 plus 3,000 plus 1,050 naira plus 200 plus 8,750. So we have 13,850. So 13,850. 13,850 is all our 13,850 is all our factory overhead. Now don't forget that this example, it serves as format for this particular account. So we are still under trade manufacturing account. We are yet to be under trading or profit and loss account. So all the value of, so I'll need to clean this so that we can continue and be managing our scope. Well done. I hope you guys are getting it. Sure, you get it. It's the iOS YouTube channel. Oh. So now with this, we need to add this value. So now the value of our prime cost, don't forget that the value of our prime cost is 334,000. Then the value that we get for the factory overhead is 13,850. So it's because of this board, we need to manage it. That's why I'm doing it like this. So definitely we have a certain value after. So the next thing is you add the cost of your factory overhead to your prime cost. So let's do that. 334,000 plus 13,850 will give you 347,850. We give you 347,000. So at this stage, now we now move to intermediate process. That is work in progress. So we go for, you need to add opening stock on WIP. So which is work in progress. So let's see what's the value for opening stock on WIP. That is 15,000 naira. So 15,000. So when you add this to it, so we have 347,850 plus 15,000 plus 15,000, you have 362. You have 362,850. You get? You have 362,850. Then you less your closing stock. Less your closing stock on WIP. So let's see the value for that. That is 10,150. 10,150. So that's the value for my closing stock. Let's subtract it. 10,150. Sorry, 632,850 minus 10,150. So we have 352,700. You can see that manufacturing accounts involve big amounts. So let's finish this off. So we are still, so our aim here is to get our cost of production. We want to know our cost of production. Now, once we arrive at cost of production, fine, we know that the goods is readily available. So now whatever you get here, after adding your closing stock on work in progress and letting your closing stock on work in progress, so this value that you get here is known as our what? Costs of production. So this is our cost of production. Cost of production. Please note that this is our cost of production. Just close it with one line. So then you come to the credit side. You bring down costs of production. So this is the only value that will be in your credit side in manufacturing account, cost of production. Then what do we get? We get 352,700. So 352,700. So our cost of production is 352,700. Now, once we have arrived at our cost of production, so then we now proceed. Now, we are now moving to trading account. We are done with manufacturing now. So we are moving to trading account. And what's happening in the trading account is that you first opening stock. Don't forget. So we have opening stock on finished goods. So let's look at the value for opening stock on finished goods. So opening stock on finished goods is 35,000. So opening stock on finished goods is 35,000. Then you add your cost of production. Don't forget, I think you add cost of production. That's what I mean by COP, cost of production. So what's the value of our cost of production? 352,700. So let's see what we have. 352,700 plus 35,000. So we have 387,700. So with this, so we call this costs of goods available. Call this cost of goods available. Then you less your closing stock. Less your closing stock on finished goods. FG on finished goods. So let me look at the value for, so that is 23,000. So minus 23,000. So let's see what we have. So this is trading. So we are already done with manufacturing in as much you have gotten our what? Our cost of production. But now we are looking for how to get our trading. What we want to derive at here is our gross profit. Is our gross profit. And don't forget, since we are done with this, since we are done, we have 302,700. We close the accounts of the trading account, manufacturing account. So now, under the trading account, we have what we call sales. The sales. So the value of sales here is 1,250,000. 1,250,000. So in order for us to get our gross profit, we need to determine our cost of goods sold. So what will be our cost of goods sold? You will subtract your closing stock on finished goods on cost of goods available to get cost of goods sold. So which is 23,000. So we now have 364,700. So now with this will now be cost of goods sold. So now let's subtract it from the sales to get our gross profit. So gross profit. So what will be our gross profit? Our gross profit will now be 1,250,000. Subtract by we subtract 364,700 from that 1,250,000. So that means our gross profit here now is 805,300. So this is what our gross profit is going to give us. So with the issue of the bird, that means I need to clean this so that we're able to continue from here. So since we have gotten our gross profit, that means the both sides here, the summation of the gross profit and cost of goods sold is going to give me the balance value of the credit side, which is 1,250,000. So don't worry, what I'm saying is that the addition of this is what's going to give you this, which shows that both sides is balanced. Both sides is balanced. So this is balanced. That means with this, by getting our gross profit, this indicates that we are done with trading account. Now let's move to profit and loss account. So we're starting with profit and loss account. So starting with profit and loss account. So in profit and loss account, so what we have interest in is, first things we have interest in our gross profit, which will come to the credit side. Gross profits. So gross profit. Then our gross profit is 805, then 300. So that's our gross profit. Then to deal with that so that we can get our net profit. So we bring down all the expenses here. So the expenses here is what we call non-manufacturing expenses. Non-manufacturing expenses. So then our expenses, so let me look at the expenses that we have in the question. Like I said, I'll drop this question on the comment section so that you guys will be able to see it and follow with the class or with the format and the calculations that we are doing in the class. So now the expenses I'm seeing here, I can see, let's start with delivery expenses. So I can see delivery expenses. So I can see delivery expenses. So the value of delivery expenses here is 600. Okay. Then I can see depreciation on van. Depreciation on van is 1,250. 1,250. Then we have depreciation on office equipment. Depreciation on office equipment, which is 1,500. Depreciation of office equipment is 1,500. Then advertising. Advertising is under non-manufacturing expenses. Advertising, which is 5,250. Advertising is 5,250. So let's see, what else do we have? So that we are not going to mix anything out. So we have salesman commission. So salesman salesman commission. So what's the value of salesman commission that we have here? Salesman commission is 300. So let me look at, so all we have here, there is no non-manufacturing expenses here again. So other non-manufacturing expenses will be dealing with anything office equipment, office used, office, So as far as this question is concerned, we don't have anything to bring out. So all these expenses is what we are going to subtract from our gross profits so that we arrive at what we call the net profit. So we arrive at what we call the net profit. So let's see the addition of all this. Let's add all these things together. So you guys can be doing that for me too there. 600 plus 1,250 plus 15 plus 5,250 plus 300. So let's see what we have. We have 800 and 8,900. So with that 8,900, that means I will subtract the 8,900 from the gross profit. So I will subtract my expenses from gross profit to get the net profit. So that means I will have 300 minus 8,900. Then we arrive at the net profit of 876,400. So with this, we have a balancing account of 885, then 300. Then we'll balance this, then work this. So we have 885, 300. So with this is our final balancing accounts for manufacturing, trading, profit and loss accounts. Please, with this, follow this step-by-step formula. Go to the question in the comment section. Then you will understand manufacturing, trading, profit and loss account. Thank you for watching. Make sure you share, you subscribe.